Okay.
I did. Well, you said, you know, and insurance is a business game. You know, somebody has to cover the cost. Right now, we're shifting the cost. We're dumping the cost on the taxpayers, and it's going to be a lot to pay. And we're shifting the cost on people who've had insurance, who will lose insurance or see higher premiums. Gentlemen, Mr. Badger, Mr. Goodman, is that not the case?
I believe it is.
Yes. Thank you. I yield back the balance of my time.
Thank you, Mr. Micah. We will now go to the gentlelady from the District of Columbia, Ms. Holmes-Norton.
Thank you very much, Mr. Chairman. Just to make it clear about the so-called 2 million jobs being lost, the Affordable Health Care Act has apparently freed 2 million people who wanted to retire, wanted to leave the workforce, or perhaps get part-time work or to start their own businesses, but did not do so because there was no other way to keep their health care except to keep the jobs they did not want to hold. Now, I want to ask about this risk corridor, Mr. Jost. Actually, I was totally unfamiliar with risk corridor until this hearing. And given the way in which it was framed, it seemed strange for me to hear that Democrats were protecting the insurance companies. So I had to look further into it, and I said to staff, go get me how conservatives would justify these risk corridors, that they're responsible for getting into Part D. And so they came back with some remarkable commentary that I'd like to ask you about. I told them I wanted only to hear about how Republicans, who, after all, authored this notion, would justify this. And here's one they came back with. Christopher Holt of the American Action Forum. The risk corridor and reinsurance provisions in the Affordable Health Care Act made policy sense at the time the law was drafted, make policy sense today, and protect consumers. They do not constitute a bailout. It's a refutation of the total theme of this hearing. Do you agree with that, Mr. Holt?
Yes. I mean,
Mr. Jost,
a number of conservatives.
With Holt's statement, Mr.
Yes.
Jost, I just want to clarify where this came from and whether it is still justified by the conservatives who were responsible for it in the first place. Go ahead, sir.
No, just say it. I assume you're going on, but this has been said by quite a number of conservative commentators that this makes business sense.
Why, well, let's take the consumers. Democrats have not been known for protecting insurance companies. They have been known for beating up, forgive me, on insurance companies for not protecting consumers. How do these provisions protect consumers?
Well, the way in which they protect consumers is that if I were an insurer, and I'm a consumer representative to the National Association of Insurance Commissioners, I've been on a lot of calls with insurance actuaries discussing the Affordable Care Act. This is a risk that is very hard to price. If I were an insurance company without any of this backstop that was put into the law, I would have priced premiums very high to make sure that I covered my risk. But insurers could look at it now and price their policies at a reasonable rate, in fact 16% less than what the CBO had projected, because they knew that if they were off the first year, there was a backstop. Now, second year, third year, we're going to have better estimates, and as in the Medicare Plus Medicare Part D plan, premiums are going to be closer to pricing as to what the actual actuarial risk is. But these programs are very important for consumers to make sure that premiums are priced without charging a fortune to cover the risk that's there.
So the ultimate benefit is to the consumer.
Absolutely.
So could these risk corridors, in your view, be characterized as a bailout in any sense of the word?
No. Not any more than the flood insurance program is a bailout, the crop insurance program is a bailout, the terrorism risk insurance program. They are all programs where There are very high risks and actuarial uncertainties that the government.
Let me just quote another. I just can't get over what conservative commentators have said. Here's another from the Manhattan Institute. Risk adjustment mechanisms get you the buy-in of insurers, but they also keep premiums at manageable levels while insurers develop experience to properly price on their own. This helps encourage people to enroll in these plans, which in turn helps insurers develop the necessary pricing experience, resulting in a virtuous cycle. Professor Joel, do you agree with the Manhattan Institute, Mr. Freeman's?
For once, they're right.
You say what?
For once, they're right.
You know, it's interesting, Mr. Chairman, where Republicans and Democrats have adopted the same mechanism. And there are things about this bill that I think both Republicans and Democrats need to be fixed. About the very last thing I would focus on is something that Republicans and Democrats have agreed about in the first place. And I thank you very much, Mr. Chairman, and I yield back the remainder of my time.
Thank you very much. We'll now recognize the gentleman from Tennessee, Mr. Duncan, for 5 minutes.
Well, thank you very much, Mr. Chairman. Mr. Micah referred to the train wreck quote, and as almost everyone here knows, that quote about Obamacare being a giant train wreck came not from a Republican, but from Senator Baucus, the chairman of the Senate Finance Committee and one of the health care leaders for the Democratic Party. And then, of course, Speaker Pelosi famously said we'd have to pass this legislation before we could find out what was in it. And every week we find out, the more we find out, the worse it gets, including, as the chairman mentioned briefly, the estimate by the Congressional Budget Office that this is going to destroy 2 million jobs over the next 3 years. But this was sold as being a law to get medical insurance or health care for those who were uninsured. I heard a program last night in which they said that the original estimates of 30 million or a little more maybe being uninsured was really incorrect, that the number was more like 9 or 10 million who actually didn't have it, and some of those were people who were between plans and or were choosing not to have coverage. Dr. Goodman, I'd be interested to know if you have what was the accurate figure then. And also, I have 2 articles in front of me that say that at least 2/3 of the people who have signed up now already had coverage. I didn't get to hear your testimony. I was at another committee. Is it accurate that at least 2/3 of the people who've signed up so far already had coverage before this legislation was passed?
There are estimates even higher than that. Estimates that only 11% in one survey
only 11%
were previously uninsured. So that means 89% were had previous insurance. So we appear not to be doing a very good job at insuring the uninsured.
Isn't the best way, or wouldn't the best way to get people to get our health care costs under control would be to give individuals more control over their own medical spending, either through vouchers or tax incentives or other ways?
Well, the Affordable Care Act does some of that. The problem is that it does a lot of things that shouldn't be done that I described in my testimony. And it's allowing pools with a lot of high-cost sick people to dump into the exchange, to dump into the individual market, which previously was a market that worked pretty well.
Right.
And now it's going to be a very high-cost market.
So I'm told that Detroit and Chicago and possibly other cities are considering, or either in the process of dumping their older, sicker retirees onto Obamacare. Is that correct?
Yeah, I believe Detroit has done the deal, and so that's about 10,000 retirees, and because they're older, they're going to be higher cost. Chicago's considering it. But there are lots and lots of cities around the country that have made unfunded promises about post-retirement health care. So there are a lot of potential costs that could be going toward the exchanges.
Charles Krauthammer wrote this. He said, the whole scheme was risky enough to begin with, but things have gotten worse. The administration has been changing the rules repeatedly. First, it postponed the employer mandate. Then it exempted from the individual mandate people whose policies were canceled by Obamacare. And for those who did join the exchanges, Health and Human Services Secretary Kathleen Sebelius is strongly encouraging insurers to, during the transition, cover doctors and drugs not included in their clients' plans. The insurers were stunned, told to give free coverage, deprived of their best customers, forced to offer stripped-down catastrophic plans to over 30 clients, contrary to the law. These dictates complained their spokesman could destabilize the insurance market. Translation, how are we going to survive this? End result, insolvency. And I think most of us feel that he's one of the most accurate and intelligent people on the scene today. Mr. Badger, I was asked by the staff to ask, they think that you may have some disagreement with Mr. Jost about the necessity of these risk corridors, or a little different view.
I have a different view. My concern has been regulatory issuances and pronouncements from CMS that have been repeated now throughout the time period, that they could make payments to insurance companies out of the risk corridor plan that exceed the amount of money that other insurers have paid in. If the risk corridors are merely, as they are in Part D, and in the risk adjustment program, both in Part D and in this law, simply moving money from insurers that are doing well to insurers that are struggling, I have no problem with that. The problem I have with the way the risk corridors are being applied by CMS is that it allows insurance companies to say to the taxpayer, we have a problem, I lost money. And that's the behavior that I think should be of concern to Congress and that it should correct.
All right, thank you. Unfortunately, I've run out of time. Thank you.
The gentleman's time has expired. We'll now recognize the gentlelady from California, Ms. Spear.
Mr. Chairman, thank you. You know, I have a fantasy that I'd like to share with you. And it's a fantasy that we would have a new House rule that would require members to wear Pinocchio noses every time they make a statement that isn't true. Because if they had to walk around with Pinocchio noses on, they would be careful about the kinds of statements they make. Now, the statement that's been made by the leadership of both houses in the last 24 hours is that we knew it was true, it's true, the CBO now says it's true, 2 million jobs will be lost as a result of the Affordable Care Act. And that statement is just false. The Washington Post fact checker gave the claim 3 Pinocchio noses, with a headline that read, no, CBO did not say Obamacare will kill 2 million jobs. The fact checker explains it like this. First, this is not about jobs, it's about workers and the choices they make. He further explains, look at it this way. If someone says that they've decided to leave their job for personal reasons, they just decided they wanted to retire early, we would not put them in the category of having lost their jobs. The New York Times editorial board called this a liberating result of the law. So, in other words, the report is about the choices workers can make when they are no longer tethered to an employer because of their health insurance. And there are so many Americans that stay in jobs just because they have to keep their health insurance. So my question is to you, Professor Jost, please do your best to clear this up. Can you explain how the Affordable Care Act frees individuals and how it does not kill jobs in this country, but has actually the reverse effect?
Like you, I run into people all the time who tell me, I'd love to quit this job, but I can't because I have to be here for health insurance. About 15 years ago, my brother-in-law basically quit his job. He had health insurance through his wife, fortunately, but he went out on his own and started a company that is now a household name that is worth billions of dollars. My wife and her family all were part of that startup. But he was able—
What's the name of it?
Rosetta Stone.
Rosetta Stone.
But he was able to do that because he didn't have to worry about health insurance, or at least he was able to go out there on his own without it. There are many, many Americans like that today who would like to go out and fulfill their dream, but they are stuck in their job because of health insurance. What the Affordable Care Act says, if you are making less than 400% of poverty, which includes a lot of entrepreneurs in this country, you can go out and you can fulfill your dream, or you can just stop working at 60 because you're tired, and you can get health insurance regardless of your health status. That's a very liberating thing, and that's what the CBO recognized yesterday. In fact, they did say there are concerns about employers cutting back on employment, cutting back on hours. That did not figure into their calculation because they said there's just too many unknowns there. There are reasons why employers might expand their workforce. There are reasons they might cut back. But the 2.5 million full-time equivalents is people who are stopping work because of they have the freedom to do so, or reducing their hours.
Let me ask you a further follow-up question on risk corridors. The risk corridors and reinsurance provisions in the ACA are really the same McConnell-Boehner provisions that were included in the Medicare Prescription Drug Improvement and Modernization Act. I know Mr. Badger is shaking his head no, but the truth is there's reinsurance in both programs. And this reinsurance, unlike the reinsurance in the Part D, is one that exists only to 2017, and there really is no federal dollars involved. So my question, Professor Jost, is it's my understanding that the Congressional Budget Office just this week released its revised budget outlook for 2014 to 2024, and it scored the reinsurance program as budget neutral. Is that correct?
It is, because under the statute, only the money can be spent that is brought in under the program.
And isn't it also true that in essence there is a transfer of funds between insurers, and thus it has no impact on the federal budget?
That's technically correct, yes. I mean, it is a tax that it's imposed on insurers in the group market primarily to subsidize the individual market for 3 years, in part because of these transfers from the group market to the individual market that have already been discussed.
And when we talk about Medicare Part D, wasn't there also reinsurance involved in that program?
Yes, there was.
And how did that work?
Well, there still is reinsurance. In fact, the risk borne by Medicare Part D insurers is very, very small. And up until recently, it was very small because it was only up to the point you hit the donut hole. At that point, there was essentially reinsurance from Medicare beneficiaries who covered the full cost up until you got to the catastrophic. When you got to catastrophic, the government picks up 80% of the risk, the insurers only picked up 15%, and the beneficiary picked up 5%.
Mr. Chairman, thank you. I see my time has expired.
Thank you very much. I'm up next. So one of my least favorite times when I was in the private sector was the time I had to redo the insurance for my employees. So I want to kind of step back a little bit and take an overview about this. And I'll start with you, Dr. Goodman. The way insurance works is they sell policies to a bunch of people, and hopefully the money that comes in from that covers the losses for the people in that group. So it ends up the healthy people end up subsidizing the 52-year-old overweight congressman with high blood pressure and a high-stress job. Is that basically how insurance works?
Well, that's true in every market, but in most insurance markets, the premium that is charged at the point of entry reflects the expected cost then.
Right. So what we had in Obamacare then was the idea we've got a whole new market, and the insurance companies are concerned that they don't know how to price this and what the actuarial risk is, how many unhealthy people versus healthy people. Is that an accurate statement of part of the problem?
Yes, and we could be stronger than that. We have built perverse incentives into the structure of the market, and I think that is totally unnecessary.
All right, so as a result of this, part of the deal that was struck in Obamacare is we put these risk corridors in, so the taxpayers are potentially on the hook in the event that the loss ratio is out of whack. That's a fair assessment of Obamacare in what we're talking about today?
Sure.
All right. So let me ask you a question. The President has been under a lot of fire for his statement, if you like your health insurance, you can keep it. And there have actually been some changes made to Obamacare as a result of that. And as a result, the policy offerings have changed. Does that run up, is that going to run up the cost potentially to insurance companies and increase the amount taxpayers may be on the hook under these corridors?
Well, I think the way they have changed some of the rules of the game within the last month or so has increased the riskiness of the products in the market.
All right. Now, assuming you owned an insurance company, would you have jumped into Obamacare but for these risk corridors? I mean, would you have said, all right, I'm out of the health insurance game, or this is too risky, or would you maybe have run your prices way up?
Well, you got to understand, I don't have a problem with a risk corridor. What I have a problem with are the poor design of the exchange, which is then going to put taxpayers at great risk to pay for those design mistakes. It's not an insurance company mistake. It's a design mistake.
Mr. Badger, do you want to weigh in on that?
Yeah, again, I do have concerns with the way risk corridors work in this law as opposed to Part D, and particularly with the way CMS said they would work.
Right.
And that is to say that in order, because of the problems that are created for insurance companies, CMS is going to give them direct subsidies out of taxpayer funds, not out of revenues that come into.
All right. So let's go to this scenario. So suppose we decide we're not going to do these corridors, and we pull them out. The insurance companies are going to be on the hook for these losses. Is there a way they're going to be able to reinvent their policies and stay in business? How do we get out of this without bankrupting the insurance companies and have no insurance market at all left, and potentially end up with the government being the only insurer of last resort?
Well, that raises other questions about the law's design that Dr. Goodman has raised, but I guess the principle I'd like to lay out is this. If you can't make a profit without corporate welfare, you can't make a profit. And we should not be putting taxpayers in the position of having...
But weren't insurance companies making a profit before Obamacare?
Yeah, they are. And they may well make a profit in Obamacare. CBO's announcement yesterday suggests that they'll do very well if they're paying $16 billion in and only taking $8 billion out of the risk corridors. I don't think they're right about that. But if they are, CBO thinks they're going to make a profit.
Dr. Goodman.
There is a better way of doing this. We call it change of health status insurance. But the fundamental principle is that insurance pools don't get to dump their sick people on other insurance pools. And if we would just follow that principle, the taxpayers would be far less at risk than they are right now.
And you think this could be done as a tweak to Obamacare somewhere in the... I mean, how do we've got such a big, massive law. We want to be... our side, I think, wants to be done with it and start over. Can this be done short of starting over and maybe get some of our colleagues on the other side of the aisle to help?
Yes, but I wouldn't call it a tweak. It would require fundamental restructuring of the exchanges, and they would probably, at the state level, have to be instructed to move over time to a rational form of insurance.
Well, we could talk about this a good bit longer, but I see that my time has expired, and just because I'm in the chair doesn't mean I get to break the rules. So I'll move along and recognize Mr. Massey for 5 minutes.
Thank you, Mr. Chairman. The Chairman makes a good point. I'd like to look into it a little bit more. Senator Rubio made the observation that when the President tried to retroactively make good on his broken promise, his empty promise that if you like your health care plan, you can keep it, by unilaterally forcing insurance companies to grandfather insurance policies that weren't included in the Affordable Care Act, he actually increased the likelihood that the bailout provisions of the risk corridor program would be invoked. Do you agree, and I'd like to give everybody on the panel here a chance to answer this, do you agree with Senator Rubio's assertion that by changing the rules midstream that the President actually increased the probability that the risk corridor would have to be invoked?
Well, if all the insurers price their products on the assumption, let's say that by the end of this year, 80% of the people in the individual market would be in the exchange, and then we change the rules and say, no, if you're healthy and you're in a plan that you like, you can stay there. Yes, of course that increases the cost and the riskiness of the exchange.
Thank you. Mr. Badger.
Yeah, my understanding is that CBO quantified that at about $500 million in payments that would come out of the risk corridor program to insurers.
Mr. Jost.
Yes, and therefore it reduced the surplus to the Federal Government from $8.5 to $8 billion, but yes, that did increase the risk. It was, of course, a response to a political firestorm over the cancellation issue, which I think was largely a bogus issue, but that was the administration's response.
Well, I'm glad to hear that all the witnesses agree that the President actually, by trying to change this law midstream unilaterally without Congress, has increased the risk that taxpayers will be on the hook for the insurance companies' losses. Mr. Badger, you've stated that, or I think you've stated in the past, that the reinsurance provision and risk corridor provisions limit insurer competition. Doesn't the risk corridor program, even if it worked, as some people say it does, by taking a pool of money and distributing it among the insurance companies, even if it worked that way and didn't take taxpayer money, doesn't it just reward unsuccessful competitors with money it confiscates from successful ones?
Well, there's no question that the formula, in effect, works that way, so that if your losses exceed your target amount that you, by more than 3%, that you would be entitled to payments out of the pool. So it is, if it functions properly, it's a redistribution from insurers who are successful to those who are less successful.
Let me ask you another question. You've argued that the individual mandate was put into place actually to benefit insurance companies, I believe. Is that correct?
Yeah, my point was, and unlike Part D, where we didn't have the IRS penalize seniors who didn't sign up for drug coverage, the argument here was that insurers couldn't succeed unless there were, in addition to subsidies, both penalties on people who didn't buy and as well canceling policies that people would have liked to renew. So yeah, the idea is these are all provisions designed to help insurance companies succeed despite some of the distortions that Dr. Goodman has talked about.
Speaking of distortions, doesn't this risk corridor provision, doesn't it incentivize insurance companies to offer artificially low sort of introductory rates because they have a backstop? Wouldn't their first rates be higher without this risk corridor provision?
There is moral hazard if you, and understand again, unlike Part D, everybody's offering the same benefit package. So the only way to distinguish yourself really in the marketplace, aside from provider networks, is by price. So if we're both selling silver plans, chances are the person with the lower price will get the most enrollees. So obviously, if you believe that the government will share in your losses, there is a moral hazard that you'll price too aggressively in order to drive competitors out and gain market share.
Thank you. Mr. Goodman, in my remaining time, you mentioned in your opening statements that employers could game the system, I believe. Could you elaborate on that?
Well, one of the techniques that they're going to use is they're going to cover preventive care with no lifetime cap, and that gets them out from under the $2,000 fine. But these can be mini-med plans. And so if a worker gets sick and goes to the exchange, then the company can be fined $3,000. But if a worker goes to that length, his medical expenses will probably be way in excess of $3,000. So this is a way for employers, just one way, and we could talk about others, for employers to move their sickest, most costly employees over to that exchange when they have a health problem.
And this is one reason that the way this program is set up, it's just not going to work, isn't it?
Well, there are many, many ways to game the system, and if we don't deal with all of that, we're going to have huge problems in the future.
Thank you. My time has expired.
Thank you very much. We'll now recognize the gentleman from Georgia, Mr. Collins.
Thank you, Mr. Chairman. I think one of the things that we get lost in many times here is we lose, and I've tried to bring this to light over time, is we lose the human face of what we're talking about. It's easy to come up here and talk about, bailouts, risk corridors. Frankly, that doesn't mean anything. And frankly, Mr. Joust, just a moment ago, you said that you felt like that the dropping of insurance coverage was a bogus issue. If you would like to come to the 9th District of Georgia, I'll be happy to show you people who've lost their coverage, who are dealing with this right now. I think that was one of the most callous statements that I've heard today in this hearing. And I think to say a bogus issue on people who are actually losing insurance and having trouble with this plan is not, there's been at least acknowledgement on both sides of the aisle that there's a problem here. And I need to say that is just, frankly to me, is just very callous to those who are having to deal with the results of what has become a very bad law.
I'd be happy to explain my response if you want me to.
At this point, I think your response was clear enough, Mr. Joust. Reclaiming my time. It's one of the issues that I've seen, and one of the issues here dealing with insurance, and again, I think insurance companies, we can deal with that in this risk corridor issue. We can deal with it from how the system was set up. Mr. Massey made a great point on how we're actually making it worse in some ways. But mine is overall in dealing with a system in which people are having to deal with. And Rebecca, and one is a constituent of mine that I talked to yesterday, Rebecca Lambert. She's from Stevens County. It's a little place up in northeast Georgia. Martin, she runs a small business, Calico Country Store. It's one of those one-stop shops up in my part of the world. You get a lot of these. You can buy groceries, you can buy plumbing equipment, all in the same place. She's recently widowed, and she's struggling to run the store. And in doing so, that all of this for the first time, she pays her bills, she pays her taxes, she works hard, and she wasn't real thrilled to find out she was going to have to go through Obamacare and do this to start with. She didn't want to dictate how she had to do it and went ahead. But being a good citizen, she said, okay, I'll do it. This is the way I've got to do it because I don't want the penalty. She went ahead, bought insurance because that was the law. She signed up under healthcare.gov. She got a plan, she thought. She received a bill, paid her premium, but has not received any proof of insurance. 5.5 hours on hold on Friday, 2.5 hours on hold on Monday, and hasn't been able to talk to a soul. She's all paid up. To her knowledge, she can't even get someone on the line to confirm she's covered. That means she spent 8 hours over the course of the day trying to figure this out through a program she didn't want to be a part of to start with. And at this moment, if she was to walk into a hospital or emergency room or anywhere, she has no proof of insurance that she has. And nobody can talk about it. With all due respect for what we're doing here, and the chairman is brought out, and there's been concerns on all sides, I'm concerned more about the welfare of my constituents and how they're having to deal with this and how they're having to go through that than the bottom line of insurance or anything else at this point. Why are we going through this in a way that puts people in positions of not understanding, of, yes, losing the coverage that they had, trying to find other coverage, or in the case of many of the state employees in Georgia, paying more or equal for less coverage? I believe, and I'll just say in a good-hearted effort, for those trying to work this, there was an effort to help. But many times in the rush to help, when you only have one, you get tunnel vision. And what is happening is there are people like my constituent, Rebecca, are the ones that get lost in the tunnel vision. To help X, we don't realize what we hurt on the outside. That's what's coming up here. And whether it's insurance corridors, whether it's risk corridors, or covering profits, or going back and saying this was capped or not, this is just the problem that we're dealing with. When you can't get confirmation, when you can't get issues that are going on. As I have said earlier from the floor of the House, I had a lady who is going through cancer treatment. And she has issues that that's not covered under her new plan. Her cancer treatments were halted until proof could be provided. Are you kidding me? This is what we're dealing with. So I think really, and not personal to any witness, but to be in a position where we're talking about this and removing it from the people, that's the problem I have here. I could question you and grill all three of you on many things. My people just want to know why is such a bad system and put on me and force me to pay higher for less, or force me to change, or force me to look at insurance companies in a way that I hadn't looked at before or frustrated with before. in a way that's very unreasonable and callous. With that, that's why we do these oversight hearings. It's time to fix this. It's not time to do it, and it needs to be done away with. With that, Mr. Chairman, I yield back. Yes, Ranking Member.
I just want to give Mr. Joseph a chance to just respond to what you said.
Well, just very briefly, obviously there were many people and are many people who are losing the coverage that they had. They are all being offered alternative plans. Some of them are more expensive. Some of them have higher cost sharing. Many of them are less expensive. Many of them have lower cost sharing. Many of those people are having access to premium tax credits that are making their health care insurance substantially less expensive. I misspoke. I have to say that. It's not a bogus political issue. But to call these things cancellations instead of what they were, which was non-renewals of the current policy offering and a renewal, an offer of an alternative, which happens all the time in the individual insurance market. I think to call them, to make it sound like these are people who are suddenly uninsured and have no chance of getting insurance, every one of them can get insurance, and many of them can get it for less than before. That's
Mr.
what
Chair, reclaiming my time on this, your first statement basically just summed up your last statement. It was callous. It did happen. And to say that it didn't and that it happens all the time is, again, a perpetuation of what we're talking about here, of being very honest with people. And yes, they have cancellations, not because the cancellations occurred and they couldn't get other insurance. It was because the government told them, because of the ACA, that these were not going to be renewable policies. And they couldn't have what they had. They don't have what they had. And to really say that, and with all due respect to the ranking member, I appreciate him allowing, this is the problem we're talking about. But that, your first statement was summed up by your last statement. And with that, I do yield back.
Thank you very much. We'll now recognize the gentleman from Michigan, Mr. Wahlberg. 5 minutes.
I thank the Chairman, and I thank Mr. Collins for following up on that and pressing that issue, because that is a crucial issue that we're addressing here. We're talking about real live people, and certainly we want to meet needs of those, frankly, smaller number right now that are having better opportunity, and those are the people we could have fixed with a far more simple system. Dealing with the issue of cost. Mr. Badger, just to make sure it's clear, is it correct that the reinsurance provision is financed by a fee or tax on all non-exchange health insurance plans?
Yes, on group health insurance plans, that's correct.
Is it accurate that the vast majority of individuals with health insurance will be paying higher premiums to finance the reinsurance fund?
Yes.
So essentially, the reinsurance fund is a large transfer from the vast majority of Americans without an Obamacare insurance plan to the few Americans with an Obamacare plan.
And to their insurers, that's correct.
To their insurers. Moving on from that, relative to cost, how do risk corridors as implemented in Obamacare impact the pricing of health insurance? Mr. Badger.
Well, I think arguably they should induce insurers to be willing to take on more risk. They also, as I mentioned earlier, provide a moral hazard. If you know that the government, the taxpayer, will share in your losses, and the only way you're allowed to differentiate yourself is by price, you may price more aggressively to gain market share. So there are some perverse incentives that actually would hurt consumers over the longer run.
So relative to that moral hazard, expand, if you would, on the implications of companies underpricing exchange plans versus non-exchange plans.
Well, to be honest, as the Professor has noted, basically non-exchange plans will soon be non-existent for all intents and purposes. But for those who are selling compliant plans, both inside the exchange and outside the exchange, those issuers would participate in the risk corridor program. They do not, however, outside the exchange, get subsidies for the coverage.
Do you think that companies did this in order to drive enrollment into the exchanges and the generous subsidies that are there?
I do believe that the purpose of the policy that required the cancellations, yes, was to move more people into insurance policies sold through the exchanges.
How do risk corridors, as implemented in Obamacare, impact the pricing of health insurance?
Well, again, as we talked earlier, there is.
I'm sorry, I missed it, but
no, that's quite all right.
out.
It's the issue there that we are concerned about is that insurers would price so aggressively to gain market share because of the fact they knew the taxpayers would be on the hook for some of their losses. And so there could be a price effect in the near term that would be favorable, but it could have long-term negative implications.
So the longer it goes on, the more negative the implications for the price for the consumer.
Potentially, if it affects market share substantially.
And health care in general.
Yes.
Okay. Thank you. Mr. Chairman, I yield back.
Thank you very much. And I see Ms. Maloney has just arrived. Do you have some questions?
I do, and I apologize to the Chairman and the Ranking Member. I have a conflict with another hearing.
Oh, that's all right. We'll be happy to give you your 5 minutes. We'll give you a second to get settled, and we'll start the clock as soon as you start.
I want to thank all of the panelists for joining us today, and I guess my question is for Professor Jost. It's my understanding that the Risk Corridor Program is a key element of the Affordable Care Act that helps keep premiums in the exchange affordable by reducing uncertainty to insurers. We know if there's uncertainty, the price goes up, right? So can you explain why insurers face such uncertainty in new programs like the Affordable Care Act and Medicare Part D, and how the risk corridors operate to reduce this uncertainty?
Yes, and again, the idea here is that insurers have traditionally priced their products based on their assessment of the health of the people that they were insuring. So they charge low rates to healthy people and high rates, or totally exclude, as they do in many instances, people who are unhealthy, or exclude their unhealthy conditions. Under the reform law that this body adopted in 2010, they can't do that anymore. And so that puts them in a situation where it's much harder for them to price their products. So there's this temporary program for 3 years called the Risk Corridor Program, another temporary program for 3 years called the Reinsurance Program, that provides a backstop for them so that they can price their products in a way that is affordable to consumers, and that's been very successful.
That's wonderful. Were the risk corridors successful in getting insurance companies to participate in Part D?
Yes.
That did work that way. Well, thank you. I'd also like to ask about the effect of risk corridors on premiums. Did the Part D risk corridor help stabilize premiums in the opening years of the program?
Yes, and the premiums in the Part D program came in under projections for the first year.
And what about the Affordable Care Act? I understand that premiums came in 16% below CBO projections. And is this in part attributable to the Risk Corridor Program?
Yes, and the CBO recognized that in its report yesterday, and it is.
Wow. Can you explain how the Risk Corridor Program protects enrollees who are signing up for health insurance using the exchanges?
Well, the Risk Corridor Program means that insurers projecting their premiums for 2015 and 2016 and deciding whether to enter the exchange or deciding to stay in the exchange understand that for the first 3 years of the program, there is this flywheel, there is this backstop, so that if their prices are off, they will get some help. Now, again, it's a risk-sharing program. It's not a risk transfer program. If an insurer underprices their product too much, they're going to have no profit at all and possibly become insolvent. So they have to be careful, but they can take a little bit of risk there.
I also understand that the Risk Corridor Program reduces the risk for insurers participating in the exchanges from both extreme gains and losses. And is that accurate, and would that translate into saving taxpayer funds?
That is correct. And also, if their gains are excessive, we still have the medical loss ratio program, and there will still be rebates to consumers. So this isn't just an open-ended profit for
Can you elaborate how this would benefit taxpayers? How do they benefit from these risk exchanges?
Well, the CBO projected yesterday that the Risk Corridor Program will benefit taxpayers to the tune of $8 billion. And that's
$8 billion?
$8 billion.
$8 billion benefit to taxpayers?
Yes. Some bailout.
Wow. Wow. Well, I think you made a strong case. This in no way sounds like a bailout to me. And these are CBO numbers, right?
That's
so these
correct.
are independent numbers saying that there will be a benefit of $8 billion to taxpayers.
That's correct.
Thank you very much.
Would the gentlelady yield just for a question?
Yes, I will yield to the chairman.
Thank you. That's quick on the draw. It's a benefit to taxpayers. What I'm trying to understand is, aren't the people who pay the excesses that are then taken off? In other words, the excesses that are being gotten are excesses payments by taxpayers. So I appreciate the gentlelady's point that it has a scored revenue, but in fact, as a taxpayer, I'm also a ratepayer, and as a ratepayer, that's where the money's coming from. So we tax people's health insurance in order to get this $8 billion. Isn't that true?
Well, I would like Mr. Jost. Usually at hearings, it's not the panelists that are answering the question, but the panelists. I would like Mr. Jost to answer this question.
Thank you. I'd be happy to answer that. No, the Risk Corridor Program is funded, well, the $8 billion in revenue will be excess profits of the insurers that are refunded to the Federal Government. There is also a second benefit to the Federal Government because the Federal Government is at risk for the premiums through the premium tax credit. So because the premiums came in 15% lower than expected, that's also going to save the Federal Government, one estimate, $190 billion over 10 years, although the CBO said that they could not determine the exact amount.
Anyone else need to answer that for the gentlelady?
Well, I know it's a very technical question. I'm sorry. But, yes, what happens is, I think as Professor Yost has pointed out, and I think as the chairman said, the money, that $8 billion, ultimately comes from the people who bought insurance. So it was in their premiums. And under the formula in the law, the insurer's actual cost relative to their premium was lower than they had anticipated, and as a consequence, they have to pay into the fund. What CBO is projecting is that more insurers will pay in than take out. I, for one, don't believe that, but I think Congress could in fact, codify that to capture the savings by merely saying that CMS is not allowed to pay out any funds in excess of what they take in, and that would lock in your $8 billion.
Thank you. Thank you all. We now go to the gentleman from...
Goodman wanted to answer.
Oh, I'm sorry. Mr. Goodman, we weren't meaning to cut you. Would gentlemen hold for a second?
Yeah.
If you need to quickly answer on the gentlelady.
Sure. I'd just like to say that that estimate is not based on our recent experience, and it's very likely to be wrong, and it's unlikely that taxpayers will gain, and most likely that they will lose.
Thank you. The gentleman from North Carolina.
So insurers that lose money will be bailed out to some degree by the taxpayers through the law's premium stabilization program. Would you all agree?
I would agree, yes.
Yes, that's
Would you agree, Mr. Goodman?
Yes.
Yes. Yeah, that's the purpose of these programs, yes.
Okay, so...
Stabilize premiums.
But they'll be bailed out to some degree, the insurance companies, right?
Well, the insurance companies are sharing risk with the Federal Government.
Right, but anyway, I'm actually quoting you, Mr. Jost, from your November editorial about this. Insurers that lose money will be bailed out to some degree by the taxpayers through the law's premium stabilization programs. Couldn't have said it better. This is just another shameful part of Obamacare. Look, I serve on the Financial Services Committee. Mr. Jost, you say that this risk corridor provision is very similar to flood insurance, right?
That's correct.
Okay. Do you know that the taxpayers are on the hook for over $50 billion in payouts? So the flood insurance program is underwater to the tune of $50 billion for a taxpayer bailout. The example, I think, is perhaps a good one, unintentionally. It is, again, a very problematic feature when the government gets into the marketplace. And look, I understand if you're a health insurer, this is probably a very positive provision for you. So thus, when the administration makes their, I don't know how many additional changes they've made in the last 2 years, above and beyond what is they're really able to do under the law. The health insurers are not complaining as much, though, about this ad hoc rulemaking as perhaps they would be if they didn't have this bailout provision within the law. Mr. Badger, is that approximately right? Is that how you would see it?
Well, as I said before, when this announcement was made that at least the Federal Government would not enforce a law requiring cancellations, the CMS responded with $500 million in payments to insurance companies out of the risk pool, according to CBO's estimates.
Where does the money come from, the risk pools?
Well, out of the risk corridors, it is supposed to come from payments from insurers who make, quote, excessive profits.
Okay.
So it should be totally internally distributed. Unfortunately, CMS has indicated that they will throw taxpayer money on the table if the receipts aren't enough to cover disbursements.
Okay, so to understand this, if I pick a different policy in my exchange, and that company is deemed to make excessive profits, where do those excessive profits come from?
Well, the excessive profits obviously come from the premium.
Oh, the premium. So therefore, I made a bad choice, and perhaps I'm paying a higher rate than someone else who is in another company that is getting the bailout, right?
Yes, it's certainly true that the money is supposed to come from exclusively from the premiums, although sometimes taxpayers are implicated as well.
Okay, so if you have 3 providers in the exchange, and you make a choice for one that is maybe the middle price one, you might be subsidizing the lower price one.
The so-called excess premiums or excess profit based on your premium may well be funneled through to that other insurer, yes.
Okay, interesting. So this could be a taxpayer bailout in execution, or it could actually be a bailout funded by those that are obligated to buy insurance through the exchange.
Yeah, the money either comes from the premiums that people pay or the taxes that people pay.
Okay, so this is not like the Federal Reserve printing money and making money from nowhere, right?
No.
Okay. Now, I ask this because it's a very common question I've got at home from my constituents about this. Look, the reason why we're talking about this is because of this grave concern about the government overreach. Look, if you're a health insurer, I see why this is a very, very positive. If you're in the business of health insurance, it's probably a pretty positive thing because it takes your risk away, and it also means you're a little more compliant with the administration when they make rules changes, so it benefits this administration's ad hoc rulemaking, right?
There are mutual interests there, yes.
Thank you, Mr. Chairman.
I thank you. We now go to the gentleman from Virginia, Mr. Connolly.
Thank you, Mr. Chairman. Professor Yost, or Jost, is it Jost?
Jost, actually.
Jost, okay.
The way I say it.
Were you, I don't know if you were aware of the fact that the Chamber of Commerce actually issued a statement warning against the Rubio legislation, the repeal of the risk corridors, and it says, and I quote, "Repeal would make it harder and less likely that companies will offer products to small businesses and individuals in the future, and would certainly lead to significantly higher premiums for coverage offered next year without these protections. It would limit choice, increase premiums, and hinder the development of a robust private insurance market." Mr. Chairman, I'd ask that this letter from the Chamber of Commerce be entered in the record at this point.
Without objection, so ordered.
I thank the Chair. Professor Jost, do you agree with the Chamber of Commerce that
Yes.
repeal of the risk corridor might not only raise premiums but would reduce insurer participation in the exchanges?
Yes, I think it would.
Could you elaborate a little?
Well, again, the purpose of the risk corridors is to stabilize premiums, to share risk between the insurers that agree to participate in the exchanges and the Federal Government, so that insurers will be comfortable coming into the exchange and charging reasonable premiums rather than to have to charge a high premium for risk. I mean, this is a very reasonable business decision, which is why the Chamber of Commerce supports it.
Speaking of that, the insurance companies themselves are helping to finance these risk corridors. Is that correct?
That's correct. Some insurers chip in and when they overprice their products, and others receive subsidies when they underprice their products. It's exactly the same way as in Part D. And by the way, it's been said several times that the taxpayers are not on the hook for Part D. They are. Any overages in the Part D risk corridor program, so far there haven't been any, would be paid out of the Medicare Trust Fund.
So the ACA risk corridors actually are sort of modeled on an existing program, the Medicare Part D risk corridors. Is that correct?
They're less generous and they're temporary rather than permanent, but they are modeled on them.
But hardly a government bailout.
Right.
And so one might even want to sort of coin an expression Herman Cain made famous in the 2012 Republican primaries. I'll do 1688. The insurance companies, if I understand it correctly, Professor, are going to finance this to the tune of $16 billion. The estimated cost by CBO over the next 10 years is half of that, 8, and the government gets to essentially pocket the remaining 8, thus saving the Federal Government $8 billion. Is that correct?
That's correct, according to the CBO.
1688. So other than that, these risk corridors seem a terrible idea.
Well, once again, it's not only that, it's also the fact that they have helped to lower premiums for individuals, which in turn has lowered the premium tax credits for the government, saving billions of dollars in that way as well. And billions of dollars to consumers.
To consumers?
Yes.
What's the intellectual thinking behind establishing risk corridors?
Well, the premium stabilization programs, all three of them, the idea behind them is that you create a market in which private businesses will participate because they know that their risk is going to be shared, at least initially, until they can figure out how to price these products. And until the market stabilizes. I mean, it's been said many times today that there are only 2 million. Well, there are at least 3 million, probably many more by now. There will probably be 6 million by the end of March. But the CBO still projects 3 years from now there's going to be 25 million. So it's going to take a little while for this market to develop.
And again, not something unique to the ACA. We've done it before.
Right.
And it's certainly something welcome in the business community as something that can help smooth the bumps while we figure out, with experience, just how big and elastic the market is going to be.
Correct.
Thank you, Professor Jost. Thank you for your testimony.
The gentleman yields back. We now go to the gentleman from Nevada, Mr. Horsford.
Thank you, Mr. Chairman. I appreciate the panel this morning and this hearing. But one of the areas that I'd like to focus on, since I'm towards the end of this hearing, is on the significant changes within the Affordable Care Act dealing with pre-existing conditions and the fact that insurance companies are no longer able to prohibit denying coverage to individuals with pre-existing conditions. They are also prevented from discriminating against individuals with pre-existing conditions by charging them higher prices for coverage. And I think that that is an important achievement in the underlying legislation. But as Professor Jost, you've talked about, this means that insurers need to be able to provide people with pre-existing conditions who are generally a sicker population affordable insurance. And one of the purposes of the reinsurance program in the Affordable Care Act is to prevent insurers from pricing their premiums too high at the outset due to an influx of these new enrollees. And so I'd like to read just a quote from the Association of Health Insurance Plans, which stated that the reinsurance program will help health plans meet the needs of high-cost enrollees who previously have not had health insurance coverage, while making individual market premiums more affordable for consumers. It went on to say that the Department of Health and Human Services estimates that the reinsurance program will reduce premiums in the individual market in 2014 by 10 to 15% compared to what they would have been without this program. So, Mr. Chairman, without objection, I'd like to enter the full statement on behalf of the America's Health Insurance Plans into the record.
Without objection.
Thank you. Professor Jost, can you explain how the reinsurance program helps insurers provide affordable insurance to these sicker individuals?
Yes, the reinsurance program is a program where if a person who has coverage under the Affordable Care Act and a qualified health plan, in or out of the exchange, but in a qualified health plan, presents claims of more than $45,000 in a particular year, the Federal Government bears 80% of the risk of those claims up to $250,000. The insurer is at risk above that amount and also below the $45,000 amount. But that provision was purposely put into the Act, and it is projected to reduce the cost of insurance by 10 to 15% across the individual market because of the fact that, as we're seeing now, many of the people who sign up the earliest are high-cost people. There are people who are coming from the state and federal high-risk pools. There are people who are retirees who have been without coverage. There are older people predominantly, just as in the individual market now. And so this reinsurance program was put there to make insurance affordable to those people.
And is the reinsurance program funded solely by contributions from insurance companies?
That's correct.
So it is not funded by taxpayers?
It's not funded by taxpayers. However, I think it would be fair to say that some of those costs are being passed on to consumers.
To consumers. So can you explain briefly why the insurance premium reductions in the individual market in 2014 will decline compared to what they are currently?
Because the reinsurance program is funded at $10 billion this year. I think I forget the exact amounts, but it's cut in about half the following year and then reduced further in the third year, and then it goes away. It's basically a program for the first year to cover the costs of this migration to the individual market.
Okay. Well, thank you for clarifying. And Mr. Chairman, I know it's just you and Mr. Langford here that are on the other side, and I listened to some of my other colleagues, one that spoke prior to my question. And I just find it remarkable that Republicans are calling this a bailout which helps individuals with pre-existing conditions, people who were previously unable to obtain coverage and purchase affordable health insurance. So I really think that we need to, again, get away from the rhetoric, look at the facts, and if you want to refer to this as a bailout, then I ask you, is it a bailout for people with heart disease? Is it a bailout for those with cancer or diabetes? Is it a bailout to protect our constituents with pre-existing conditions from being gouged? Is that what we refer to as a bailout? You know my circumstance, Mr. Chairman. Last year I had 6-way open heart bypass surgery. It's only because of the grace of God that I am here, and because I was able to access a health insurance plan similar to one that my constituents are being asked to enroll in. I'm in the exchange as well, and it's only because of that that I'm not bankrupt. And so this is important, and we continue to just have these hearings that want to demagogue the issue rather than work to repair it, to make it better, or to implement it right. And I yield back my time.
Yield.
I yield back my time. My time has expired.
Thank the gentleman. We now go to the gentleman from Oklahoma.
Thank you, Mr. Chairman. And Mr. Horsford, I do understand, and we are grateful for a very successful surgery for you, but also have people in my district and in my state that had a cancer doctor last year that they can no longer access this year. And they're in the middle of treatments. I have people that are in my district that have to have 2 knees replacement, had 1 knee replaced, and then they go back this year to get the 2nd knee replaced and find out, no, you can't use this doctor because the plan has changed. And part of the issue that we're facing with seems to be extremely narrow provider networks to try to control the premium cost, and then we have less access to doctors. And so I would ask Mr. Goodman or whoever may be that wants to be able to address this, what are you seeing in the provider networks to be able to hit some of the target numbers?
That we're getting a race to the bottom, and that the insurers are putting out fees that are very low and taking all the doctors who would accept the low fees and not taking any others, and that often excludes the best doctors and best hospitals.
So the best care, the most experience, the greatest insight as far as treating multiple patients, those individuals now have lost access to those doctors, and they're getting new, young, which great, I'm glad they've been well trained, but they're not getting access to maybe the doctor they had or the one that they prefer.
I don't know what all the profiles look like because it's still early, but it's clear that the networks are very narrow, and you have to pay a lot more to have a network that looks like the old network you were in.
Okay, Mr. Badger, let me ask you about this concept of picking winners and losers, and some of the change that have happened in some of the plans and grandfathering in health plans and some of the transitions and the rollouts and everything else. Do you have a perception that right now we're picking winners and losers as far as in insurance companies as well?
Well, we are certainly preferring coverage in the exchange to coverage outside the exchange. And if I might, I know you're on the clock. I don't want to.
We both are.
Your time. But, you know, it was said earlier that, well, you know, they didn't get their plans canceled. They just didn't get it renewed. It happened all the time. Prior to enactment of this law, there was something called HIPAA that was passed by Congress in 1996 that guaranteed renewability in the individual and small group market. The effect of this law, coupled with the regulations, is it became illegal to renew that coverage. And the resulting cancellations were precisely to push people into exchanges.
So the question is on some of the rules and what we're dealing with today as well. There seems to be a preference to say if you played ball with the administration and got involved in the exchange, we'll make sure you're taken care of. If you didn't get involved in one of the exchanges, then you're kind of outside this loop.
Insurers in the exchanges definitely enjoy tremendous advantage under the law and with respect to these provisions.
This is part of the struggle that we face as a federal government, the cronyism, the fact that if you're willing to come into the administration, play by the rules, do it their way, then we're going to make sure that we protect you. Otherwise, then no, you don't have those same protections. And so that pushes industry to say, well, we better come to the table or else we'll be on the table. And that's a problem in a free market system and in a system where we want there to be the greatest amount of transparency and the least amount of interference from government. Mr. Goodman, you want to be able to comment anything on that?
Well, I think all of the sectors were pressured in that very same way. And what I heard was if you don't come to the table, you're going to be the lunch. But it's the same message. And so here in this city, a lot of organizations did a poor job of representing people out in the hinterland and cooperated with something that now in retrospect looks like it's very poorly designed.
Mr. Badger, insurance companies have argued that it's unfair to change the rules now, that they already have the parameters set. Please don't change the rules. Do you consider that a fair argument?
Well, it's an understandable argument. The problem is, again, we've had a number of people, certainly people who have benefited by this law, but people who are hoping to renew their coverage, people that perhaps were able before to see a particular doctor and no longer able. We changed the rules on them.
So how many times do you think CMS has changed the rules during this process?
They've changed considerably. In the reinsurance alone, as the professor said, they're still changing the rules. They're not solid as yet.
Which, again, goes back to our same issue, is the rules seem to change consistently, and there doesn't seem to be a consistent plan, and the consumer is very much out of control. And for the American people, that they just want to be able to choose for themselves and be in control of their own health care. Now suddenly even the health care provider that they go to is not in charge of their health care and is not making decisions for them, and they make another phone call and they're not in charge of it either, and they're trying to find out who is controlling my health care, how far do I have to go to be able to find the person that's making the choice on where I can go, what I'm going to pay, what doctor I'm going to have access to, what treatment that I'm going to have. And it's very distant in this process, and it's continuing to frustrate Americans. Agree or disagree with the policy change, Americans just want to have control back of their own health care again and be able to make decisions. So with that, I yield back.
I thank the gentleman. Today, go ahead and put the slide up. Today we covered a number of subjects, some of which our panel and our first and second panel were very critical to. Many of the things that were covered were tangential to the hearing today. On the board in closing, you have the original projection in 1967 of the cost of Medicare and the actual cost of Medicare. Again, these are 1967 dollars. They're very reduced. Just yesterday, the CBO similarly is adjusting by threefold the cost of jobs to America and by seemingly double, another $1 trillion, the cost of this plan. Today, much of our discussion centered around a plus or minus $8 billion bailout. Mr. Horsford wanted to know who was being bailed out. The fact is that under this program, whether it was done in the past or not, it guarantees that the health insurance insurers will get their full 3% by overbilling, and if they make an error on one of maybe a dozen or 2 dozen policies and they lose, they will be covered out of the excesses. In no case will the ratepayer, and since Obamacare has been ruled to be a tax, the taxpayer who is paying excess monies in for health insurance, in no case does that health insurance payer get his or her money back. These are undeniable truths. Obamacare is getting much more expensive both in jobs and in cost. Obamacare's excess monies paid in by people for their health care do not come back to the ratepayer, and in fact, there are a number of embedded taxes. As we continue to look at the Affordable Care Act, this Chair, along with our ranking member, have an obligation to ensure that we do look at the cost drivers of health care and the areas that are, in fact, in need of consideration. This was a small area, although we touched on larger areas. I want to thank our panel of witnesses for coming prepared. I will hold the record open for 3 days for additional thoughts that any of our witnesses may have and extraneous material by members on the dais. Does the ranking member have any closing statements? The gentleman is recognized.
Thank you, Mr. Chairman. I want to thank the witnesses for being here today. Clearly, as has been said earlier, it may seem like we are in disagreement today, but the fact is that these risk corridors were something that under Medicare Part D are still in existence and will continue to be and has been for 10 years. And under the Affordable Care Act, you're talking about a 3-year limit. Very interesting. And I think that, as I listen to Mr. Collins, I am concerned that he said that he has some constituents who are not able to have the type of insurance policy that they had before. And I think that those kind of issues ought to be addressed and should be addressed soon. And I'm sure they will be. At the same time, I could give him story after story of people who were suffering from cancer, heart disease, that had absolutely no way of getting any kind of treatment, period. Or if they got treatment, it was in an emergency room, and it was basically to save their life, but there was no follow-up. And so they were basically out there on their own. I think that, Emerson said that we should not be pushed around by our problems and our fears, but we should be guided by our hopes and our dreams. And I think one of the major things that we need to concentrate on is how do we take care of all Americans. why do we leave anybody behind? And that when we are basing it on our hopes and dreams should be that we keep people well, and if they get sick, we do everything in our power to help them get well. There are a lot of people who suffer, and I think, it just seems to me that we need to move from just criticism to actually making the repairs that are necessary. Nobody said the law was perfect. This is a very complex law, and it took many, many years to bring this about. A lot of presidents tried to do it. This president accomplished it. And so hopefully, moving forward, we'll be able to do just that. One of the things that I did want to ask Senator Rubio and didn't have a chance to, but I wanted to ask him, you got 850,000 people in Florida who have no insurance. And yet and still the governor down there has made a decision that he would not open the door for them to enter into Medicaid. And those are people who are, many are sick and are in need. I mean, automatically you put 850,000 people, give them insurance, provide them with insurance. That's significant. And so, again, we've got work to do. I think all of us have to pull together and, again, move forward